Friends, investors, and traders. A very good morning, good afternoon, good evening, wherever you are. Today, I'm going to talk about this company called LG Balakrishnan and Brothers Limited, which is trading in the National Stock Exchange of India, and why I believe the stock price of this company is extremely undervalued. Just to give an introduction, let's talk about what this company does. So, LG Balakrishnan and Brothers is an original equipment manufacturer. So they manufacture chains, belts, brake shoes, and sprockets for automobiles, and predominantly for two-wheelers, where 85% of their revenue comes from, and 15% to cars, light vehicles, and heavy vehicles. So the company has been in operation for about a decade, and they have 22 manufacturing locations spread across the north and south of India. And they are a leader in their field with about 75% market share in the automotive chains in the two-wheeler industry. And they have Bajaj Auto as one of their key customers, but they also supply to major two-wheeler automobile players in India like Bajaj, TVS, Enfield, Yamaha, and Honda. So as you can see, they are a solid business which has been around for over a decade, and they have consistently been performing very well, as you can see from their sales, which has grown by 9% CAGR in the last decade. And most importantly, their profits, their EPS has been consistently on a growth trend and has grown about 11% CAGR in 10 years. Friends, I believe the fundamentals are very, very important in order to analyze a stock price, because I'm a big fan of American investor Peter Lynch, who has a famous quote which goes like, if you have to follow one bit of data about a company, just follow the earnings, the EPS, because everything else is noise. Everything else, like the stock price, can go up, down. It could be like 30% down in 6 months, and it could go again 50% up in the next 6 months. Anything can happen because stock price moves on sentiment, news, lots of factors. So there's a lot of noise in the stock price movements, but eventually the stock price will catch up to the earnings, and it will follow the earnings trajectory. So if the earnings have grown consistently at 11% CAGR in 10 years, and you can see the stock price also has grown at a 25% CAGR in the very 10 years. So that's proving the point. Now, why this company, which has been performing very well, as you can see from the sales and the profit growths, and while the company has grown in size, look at their assets have grown about 5 times, but the debt at the same moment has come down. It has been going down from 218 crores rupees to only about 72, and probably the company may extinguish debt. So which clearly says about the good cash flow generation that this company has. Now let's look at the stock price. So the price has been going up consistently, as I said before, whereas the price to earnings ratio, the valuation multiple, has been declining, and it was almost 7 about a month back, and even now it is barely 10. To just give you a context of where we are, we need to look at the peers of this company. The peer automotive OEM manufacturers like Motherson Sumi, Bosch, Wapco, Exide, although I would say the last two are battery players. But anyway, look at the PE 10, look at the PE of the peers, they're well above 30. I would say on an average about even 40. And look at the price to sales. This company has one of the lowest price to sales amongst its competitors, and one of the lowest price to book values. A company like Motherson Sumi is about trading at 5.5 times its book value, but LGB is only 2x its book value. Even from a PE basis, it's barely 10. I mean, Nifty currently is trading at a PE of 20, and Nifty has corrected about 10% in the last couple of months, and now it's trading at a PE of 20. Earlier it was about 26, 27. So typically a growing company like LGB should trade somewhere in the 15 to 20 price to earnings multiple, and it's barely 10. And that with more growth to come. Just look at the quarterly results. So the company on a trailing 12 months basis has already doubled its earnings. So in a full year of March 2021, the last year, the company made an earnings of 42, and now they have almost doubled it. And the year is not over yet. We still have 2 more quarters of results to come. So going by the trend, let's see. So in June of 2020, or let's look at September 2020, the company made about 9 EPS, and in the recent quarter they have almost tripled the EPS. So let's say in the coming in the 2 quarters, which is December 2021 and March 2022, if the company just doubles the EPS that they made in the last year, which is roughly about 35 for the 2 quarters, so let's say they are going to double it. So they're going to produce 70 EPS in the next 2 quarters, and add that up to 70, and this is 80 and 25. Let's say they're going to make an EPS of, they're going to land at 100 EPS in full year 2022, and the stock price of the company is currently 650, and that gives you a price to earnings of just 6.5 on full year 2022 earnings basis, which is extremely low. Even if let's say the price to earnings is going to go to 15, which means the stock price of this company could well go to 800 or even close to 1000. There's a lot of potential for growth, although some technical analysts might say that the stock price is almost reaching the previous tops, and there's a good chance it might correct a bit here. But as we saw from the fundamentals, the earnings are only going to increase, and the stock price, maybe not in the short term, but in the long term, it is going to follow the earnings, and it is going to rise towards the 800 to 1000 rupees mark. So this is a monthly chart. Let's just look at your top-down analysis. So this is the pandemic low, and the stock price almost came down to 160, and since then it has been on a rise. Although and look, even in the weekly chart, the stock runs up a bit. It corrects about roughly, let's say 30% maybe, and then it runs up again, corrects a bit, and then it runs up. And there is, as I said, a lot of potential for growth here. Friends, I think the strategy here should be to keep buying on dips in LGB. There was a very good dip that came here when the stock price came to around 400, and then it immediately shot up to 580. And even just recently, at the beginning of December this month, The stock came down to around 460 briefly, and then it again shot up like a catapult, a slingshot, and now almost touching the all-time highs. I definitely believe that the fundamentals of LGBB back it to break the all-time highs and definitely move towards the 1,000 rupees or at least 800 rupees mark. And my strategy, at least personally, I bought uh, this stock during this dip in early December, and I'm still holding LGBB, and I'm looking forward for the stock to breach its all-time highs and move forward, and hopefully they deliver on the next 2 quarters results. Thanks for staying with me, friends, and that was my analysis of LG Balakrishnan and Brothers and why I believe the stock is extremely undervalued at only 10 PE at its current earnings, and it easily can go to 15 PE. And imagine if the company delivers on track for the next 2 quarters results, it could very well go ballistic. Thank you, everybody. A very happy new year in advance. Happy investing.